So you're constantly analysing the market, looking at the market fundamentally and technically for the answers to currency direction and entry levels. And then we're looking for the overall market theme. What we're really referring to here is what's happening in the big picture. Geopolitical issues fall into this component. Economic crisis and various political issues can determine the direction of the currencies and have a big influence on whether we're a buyer or a seller of any specific currency. What we really have to look out for are events that dominate the news. The biggest event will always dominate the markets. If the US dollar is involved, then it will impact all currency pairs. If it's an isolated currency, then probably just that currency. For example, we have the US debt situation dragging on as they continue to print more cash to pay their bills. It's an event that will resurface once those debts are due to be repaid. We also saw during the Euro crisis in 2009 the situation with the pigs: Portugal, Ireland, Italy, Greece and Spain. This is another ongoing issue that continues to simmer away in the background and one that we expect the ECB to address shortly. So those two events are just some of the events we have to keep an eye on. Geopolitical events like the situation between the Ukraine and Russia. This is another situation which is creating a lot of disturbance in the currencies. We have the international political stance jumping up and down, and then the currencies start to fluctuate. These events break down the normal flow of the currencies and are a complete nuisance. We have to manage positions a lot closer around these events because the announcements that come out are completely random. Because of that, you can't really predict when things are going to move. And that's when trading becomes convoluted and when traders lose trust in the general flow of currencies. If anything, many traders generally stop trading until these issues have cleared up. But let's not forget, there can also be some good opportunities around these geopolitical events. You can get some really good moves if your timing is right. But it's a very fine line between making lots of cash out of the event and getting caught up in the whole mess itself. So be warned, trading these events is higher risk. So perhaps trim your trade size or widen your stop and take profit parameters. There's higher risk around these events, especially because we don't know when they start and when they end. You compare this to an economic data release which has a specific time when it comes out, the number hits the screen, we have a forecast, and there's our answer. It's a very clear trading event. These geopolitical events, on the other hand, there's no start, there's no end. It's very hard to work out a general bias from a lot of the comments, and that's where the higher risk comes into play. Now, there's other opportunities that we can take advantage of. Natural disasters, weather systems, earthquakes, and of course terrorism. In this day and age, terrorist activity is something that you need to be monitoring because it can create very specific direction on certain currency pairs. So when we're looking at the overall market theme, we're looking at the overall big picture sentiment. This will generally override all economic data releases. Traders get very disheartened when these geopolitical events occur. You can have some very clear fundamental releases, but they'll be overlooked because of the impact of these geopolitical events. Now, if there's just one event, it can sometimes make trading even easier. As I said, a natural disaster or a terrorism event can be a good opportunity. But if there's more than one geopolitical event, for example, we could be having situations where North and South Korea are fighting. Russia and the Ukraine are at each other's throats. And there's always pressure on China to float their currency. When there's more than one geopolitical event, trading gets a bit convoluted because traders are doing different things in different time zones. They're looking at different events, and the normal flow of currencies is a mess. So following the news is quite important. And that's why we use Reuters to keep up to speed with the market. Now, first and foremost, the economic data releases. You're looking at the overall news events, trying to focus on the highlighted, high-impacting economic data releases. Keeping an eye on the equity markets is going to give us very specific direction with regards to the US dollar. Now, I've also got the dollar index here. This could be very worthwhile following to see what's going on in the US dollar, especially when there are geopolitical events occurring. Last but not least, also looking at your overall technical analysis. Focusing on the low risk entry levels where we know there will be a momentum shift if the currency breaks these trend lines. Monitoring the fundamentals is important because you need to keep abreast of what's going on. Traders are always looking ahead. The biggest current issue is the concern around the China economic bubble. Traders are concentrating on China a lot closer than previously because it has ramifications for world growth. It also is a huge opportunity for the Aussie dollar, as it is the biggest importer of Australian products. So keep a close eye on the Aussie dollar during these releases.